Hello, Steve Koukoulas here, Economist in residence with the fabulous Zagga team. And wow, what an economic update this is going to be. Where to start? Look, I think we'll start with the RBA. They left interest rates steady at their August meeting. They've still got a bias to hike interest rates. And by a bias, I mean that they may, and I emphasise may, be triggered if that inflation rate doesn't come down as rapidly as they're hoping it to do. And in my view, I think inflation is coming down. We look around the world economy, which is another part of what's happening right now. We've got the US on the edge of recession. We've got aggressive interest rate cuts being priced into the US and money markets in Europe, Canada, the UK, New Zealand. So we've got this sort of scenario where the RBA and Australia are sort of the odd ones out at the moment, unless, of course, the RBA is wrong and they change their mind about the economic outlook. That said, it's clear that the economy is weak. We're going into the second half of 2024 with economic growth subdued, building approvals still tracking, at the lowest levels in about a decade. There's still concerns about some levels of skill shortage, although the rise in the unemployment rate is easing that a little bit. But basically, the economy is weak, and a lot of areas in construction, in retail, are still doing it really tough. We consumers are really hunkering down on our expenditure. We know that real retail sales have been declining in real per capita terms for the best part of 2 years. That's never happened before. And so that weakness in the economy sort of sits in contrast to what the Reserve Bank's saying about the economy being resilient, inflation pressures being resilient. So as we sort of try to just sort of distill where we're at, the remainder of this year, 2024, will be weak for the economy. There's not much doubt about that. Sure, there's been the income tax cuts, which have had a little bit of an effect on consumer cash flows. There's electricity subsidies, which will again have a $75 a quarter. It's not that sort of order of magnitude that'll spark a big rebound in consumer spending. So we're the missing link. We need to sort of change for that economy to pick up. In the meantime, the global economy is softening, commodity prices are edging lower. So the picture for Australia, dare I say it, is one where, it's going to be a challenging second half of 2024. I remain optimistic about 2025 because we do know, well, I think that inflation is going to be lower than wages growth. We're going to get some real wage increase, which will help consumers' confidence as well. And when I look at the money markets, as opposed to what the RBA is saying, money markets are giving, guess what, 0% chance of a rate hike. And they are still pricing in interest rate cuts here in Australia by the first quarter of 2025 and another couple of rate hikes after that over the remainder of the year. To me, that's a bare minimum of what we'll see from the monetary policy side here in Australia. So fascinating times domestically, the global economy, the market ructions that we've seen in the last week or two are probably going to continue until we see what central banks are actually doing with interest rates. The US Federal Reserve is the critical one, but our RBA, they won't be far behind. You mark my words. Thanks.